Okay, Market Timing Academy here, and today is November 21st, and we're going to take a look at Apple Computer, a stock that we talk about quite often. If you're a follower of the Market Timing Academy, you'll recall that that we highlighted this long basing pattern that the stock went through with a breakout or a potential buy opportunity right through this area, and since then you've had a nice uptrend, as you can see through here. And now what we're trying to do is figure out what to do with this stock. And so, you know, recently the market has moved into a confirmed correction. Okay, so it's no longer in an uptrend. And what that means is you want to start looking for reasons to take profits on your stocks, minimize your losses, and really avoid new buy candidates if at all possible. And so with Apple Computer, if you're a follower of Market Timing Academy, you've been in this stock for a while and you've done very well. I want to highlight this area right through here. And if you're a follower of the Market Timing Academy, you would have got stopped out right in this area here. Now, since then, the stock has pulled back to its 50-day moving average, which is typically a good area to start to add to the stock or buy the stock if you don't own it. But I want to point out something very important here. Number one, the market is in a correction mode, which means that you don't want to be buying anything. Okay. Number two, I want to show you a few things here. Now, what we've got is we have a daily candlestick chart with a 50-day moving average and a 200-day moving average, a volume indicator, and a momentum indicator called MACD. Now, what we do is we look for areas of what's called negative divergence, which is a warning sign when you're trading a stock. And let me show you an example of negative divergence here. If you look at the trading of Apple, you'll see that the stock has been in an uptrend right through this area. But what I want you to notice is if you come down and you look at the MACD, which is a momentum indicator, the MACD has been in a downtrend. Okay, so you'll see this is headed in an upward fashion, this is headed in a downward fashion. So what that tells us is that this move to the upside has not really been supported by the momentum that you would like to see in the trading of the stock. Because remember now, the market is nothing more than supply and demand. If there's more people buying than selling, the stock goes up. If there's more people selling than buying, the stock goes down. In this case, it's showing you that yes, the market or this stock is trading upwards, but the fact is the momentum or the power behind the move is going down. That's called negative divergence. And when you see negative divergence, you definitely want to avoid new buys, but also you want to keep your stops really close. Now, one other thing that I want to point out here is if you look at the volume indicator right through this area, you can see these red bars. These are down days in this stock. And notice on those down days how much more significant the volume has been than the up days if you go through here. And so the bottom line again is that's showing you that the selling, when this stock has had these down days, the selling has been very intense. The momentum of the stock has been up, but the momentum of the trading has been down. So again, if you own Apple Computer, get your stops really tight. Now, you should have been stopped out back here if you follow our research, but if you didn't, no big deal. Just keep them very tight, because if the market continues in an ugly fashion, Apple Computer could have some trouble here because you're seeing that the momentum with the stock is not as strong as it used to be. So again, we still love Apple Computer as a company. We think that it's revolutionizing the way that we use our mobile computing, and we're going to want to own Apple Computer for a long time here. I think there's a lot more money that can be made. The stock right now is at roughly $306 a share. You know, some of the estimates are upwards of $500 a share. But again, when the market gets sloppy, you see these kind of negative divergence and you see this kind of volume on the down days, you just want to be super cautious. So this is the Market Timing Academy. If you'd like to learn more about how we can help you, go ahead and visit www.markettimingacademy.com.